Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm joined by Amir Adnani, President and CEO of Uranium Energy Corp. Amir, thank you for coming to my show. It is great to have you.
So I finally get to meet the Triangle Investor. What's the triangle all about?
I don't know.
Frankly, it's your favorite shape.
Yeah, it's my favorite shape. Exactly.
There we go.
Else. Yeah.
Well, it's a pleasure to connect with you. I follow you on Twitter, and I see you do cover the sector quite a bit. But I noticed in your background there's gold, silver, lithium. So you're a good resource all-around person. It seems like. So appreciate your coverage and work. Thank you.
Thank you, Amir. Amir, you're first time in my show, so I will ask you the same question what I ask all my first timers, and that is, how did you discover uranium? And give us your background, please.
You know, I'm an entrepreneur by background, and my focus really has been in the resources with commodities, gold, uranium, exploration, development, etc. And as an entrepreneur, I felt very strong about uranium from the very beginning, because I love the fact that there were just very few players involved in uranium back in 2004 when I first started to put a plan together to get into the business, a business plan that basically got us launched in 2005 with Uranium Energy. To this day, I think it's quite fascinating that uranium is such an important commodity for energy needs. Yet again, there are a handful of companies globally at most that have production capabilities, and the industry is just so small. And to me, that's exciting, because that means that there's room for significant growth. And so that's what always appealed to me about the uranium business from the get-go. That was almost 20 years ago. And I still feel the same points apply today. Still a small sector, still has to grow much from these levels. And so that's what kind of really got me involved as someone who saw an opportunity to build a business, launch it, and here we are with UEC 18, 19 years later.
Excellent story. Amir, let's touch a bit on the WNA symposium that took place in London a few days ago. You were there. In the terms of sentiment, would you say that this was the most bullish symposium, WNA symposium, that you attended so far? And what were your general impressions and conclusions from this event?
Yeah, I would say in my 20 years in the business, this was the best WNA I've ever attended. I think individuals that have been in the business for 40 years, you talk to someone like Scott Melby, my colleague, who I think you've interviewed as well, he would tell you it was, even in 40-year context, one of the best WNAs. So it really speaks to where we are in the cycle right now for the acceptance that nuclear power is receiving globally, and the growth estimates for demand on nuclear power expansion and development, but also where we are on the supply side, which is a very challenging place right now. There just isn't enough supply available, and there is arguably a bit of a supply squeeze developing as a result of this long-standing deficit that we've had, and the fact that we, as an industry globally, there hasn't been major mine development for over a decade. It's starting to catch up. So the good news is that I think higher prices will take care of all these problems, and projects and companies will be incentivized to bring new supplies online. And the other good news, as you know, is that uranium is a very small percentage of overall cost for nuclear reactors. Yeah. But just like the Fed likes to say higher rates for longer, I think we're going to have higher uranium prices for longer. And that's a very exciting setup if you're involved in the uranium business.
Yeah, agreed. I know you can speak about specific and potential deals, but did you have any conversation about potential offtake agreements or similar cooperation at the symposium?
Well, so as you know, one thing that's quite differentiated about the UEC approach is the fact that we're 100% unhedged. And so we actually don't entertain discussions or contracts where there's fixed pricing or contracts with ceilings, which is typically what utilities have been looking for.
Yes.
For sure, the market is changing. And as you end up in a tight supply market, utilities will become more open towards contracts that are simply linked to spot market pricing. So that is a contract that we would entertain, because we don't mind selling under a contract, but we don't want our upside to be capped. We don't want ceilings. We don't want fixed pricing. So we had many discussions around these lines at WNA, number one. And number two, I would say the most bullish thing that I learned at WNA was the fact that in the coming weeks, we expect to see a number of new utilities come to the market with RFPs and looking for, RFP stands for request for proposals, looking to formally purchase additional uranium, some for very near-term needs, some for needs starting in 2025 and beyond. But regardless, you have a situation where the larger producers are basically sold out. And as we speak, there isn't a big new uranium mine under construction anywhere in the world. So where exactly these supplies can come from to meet this additional new utility demand in the form of RFPs is anyone's guess, but it certainly does continue to put a bit underneath the market, because we went into WNA and the uranium price had just broken into the 60s. And as we record this interview, the price is approaching 68. By the time you release this interview, the price could be a 70. I mean, the market is moving very fast.
Yeah, that is true. So at the moment, we have a contracting cycle speeding up. We have more physical buyers coming to the market. Supply and demand equation changing, getting more tight. Primary and secondary supply underperforming due to geopolitical issues,
right?
Transportation issues, market shifting from underfeeding to overfeeding. Niger, I can go on till tomorrow. My question for you, Amir, is this a perfect storm for uranium, and do you think this is the real uranium squeeze?
Yeah, it's just a really positive setup for sure, and it's going to be it's going to drive higher uranium prices. And this is what I think, if you're a uranium investor, you've been waiting for. You've anticipated this. We've talked about the fact that there was a supply deficit for a very long time. There was obviously above ground inventories that help balance the market, but those are now also gone, or very difficult to find, or just not available, right? If you were a Japanese trading house that had uranium available because your domestic market didn't need it, you would provide that into as a secondary offering. And now with Japan turning reactors back online and being fairly committed to that process, there's less material coming out of Japan. There's less material coming out of enrichers. You talked about going from underfeeding to overfeeding. Yeah. So the market has absolutely switched. We've hit an inflection point. It's real. And there is a very difficult situation right now, I think, facing anyone who needs to buy, let's say, 1 million pounds. You need 1 million pounds typically for one reload on one unit. And there's over 400 units in the world. How are you going to buy 1 million pounds right now, where just buying 100 to 200,000 pounds is difficult? I've heard market participants say recently that if you were to buy 1 million pounds, it could move the price up $10. So that's how tight the market is. And we have millions of pounds of demands coming to market in the next few weeks in the form of RFPs. That doesn't include investors. That doesn't include the fact that Sprott has finally gone slightly positive NAV, and they've raised some money. They haven't deployed it yet, but you have the Sprott factor. You have, and we heard at WNA that there's a new sequestration fund being launched, a new fund that's going to do a list in UK and Astana, and that's going to look to raise $500 million. Where on earth are they going to get all the uranium from? $500 million? And that doesn't include Yellowcake, and that doesn't include a handful of hedge funds who were all participating at WNA looking for physical positions that they want to take. So ultimately, I just, again, to your point, yeah, the stars seem to have finally aligned very favorably here.
Amir, how do you think that the story around sanctions on uranium imports from Russia will eventually unfold?
We just have so many positive things going on just pure supply demand fundamentals, and just the shortage of physical and the supply squeeze that's developed, that I don't know if you need anything more on top of that. But I see a high probability that there'll be some form of sanction, and could happen even later this year. That's what has been consistently discussed. It's being rolled out in a way to minimize disruption to existing utilities that might be overly dependent on Russia. But there is no doubt that there is a bigger trend here taking place of the United States repatriating the nuclear fuel cycle that, frankly, was offshored to Russia since the end of the Cold War. And the highly enriched uranium treaty had a lot to do with that. And it served certain strategic outcomes for both the US and Russia. But not only has that program ended, there are simply different strategic objectives moving forward. For the US to really back the advent of small and advanced modular reactors in the US that require HALEU fuel, the high assay low enriched uranium that's enriched up to 19.75%. That is not something the US is going to want to strategically depend on anyone for. And hence why there is a concerted effort, a bipartisan effort to try to stand up a domestic nuclear fuel cycle. Initially, there's massive commitments being made to enrichment, and then it's going to be conversion. But of course, you can't have billions of dollars invested in conversion and enrichment and not have the feedstock, right? The uranium fuel cycle starts with natural uranium. And so you need it all. And so this is an important trend, which would mean sanctions are coming. As you know, there's a bill to ban Russian uranium imports. It has bipartisan support. It's sponsored and is being championed by Senator Barrasso and Senator Manchin. And I think these are realities that will have an impact and will probably further increase the value of uranium on US soil. This is an important development because, again, if you recall earlier this year, the Department of Energy did create the Strategic Uranium Reserve. They did make an initial purchase. At the time, the uranium market was $20 a pound. They paid about a 20% premium to secure 1 million pounds for the initial purchase of that reserve. Of course, URC, as you recall, was a recipient of one of the largest awards at 300,000 pounds for that. And the reality is that you had to be a US company with US assets to be eligible for that. Not even Canadian assets qualify for the Strategic Uranium Reserve. So we know that as a fact now, which means US assets will, for the foreseeable future, be unusually in demand because not only are they pounds that can address the supply deficit, not only are they pounds that can be sold to a US utility that is looking to diversify its supplier base, but it's also pounds that is eligible to be sold to the US government. And the US government will buy at any price because that's a strategic government mandate. And again, we've seen them pay big premiums to be able to secure pounds with a US address on it.
Yeah, you're right about that. Amir, let's touch a little bit on UEC developments. Can you give us an overview of your uranium production-ready assets in the United States? And the main question, do you have a time frame of production starting for those assets?
Yeah, lots to talk about there. And of course, as you know, UEC has been the fastest growing company in the uranium sector anywhere in the world. Today at $68 uranium going to $70, all those acquisitions that we made when uranium was at $20 a pound to $40 a pound look very good. And we made, as you know, close to $600 million of acquisitions. We have a physical portfolio where we were signing long-term contracts at fixed prices to buy uranium. And that has all been a very important part of showing that the company is actually generating revenues, making profits as we speak. And we have a highly differentiated profile today where we combine, and we're the only company that really combines US assets with in situ recovery that are lower capital requirement and faster production restart. We combine that with Canadian high-grade assets in Athabasca Basin. So that 1-2 punch of US and Canada portfolio is very unique to UEC. We're obviously also unhedged and unlevered. We don't have any debt on the balance sheet. This is a debt-free company, no convertible debentures, no royalties, no streams. This is a very clean company and 100% unhedged. All of our pounds are unencumbered. And this is the market with a supply squeeze emerging where you want to have unencumbered pounds. The asset base that we have in the US and Texas and Wyoming, we have 7 fully permitted ISR projects that are satellites to 2 fully built and operational central processing plants. We want to see the uranium price stabilize above the $60 level here for at least a quarter. We're about 2 to 3 weeks into it. And at that point, we'll make our commitment to the production restart. At that point, the production restart could take another 6 months. So from today, we're looking at least another 9 months before we would restart. This is a very disciplined approach because obviously last year, the uranium price did get to 63 and then come back down. And this time around, it does feel different. This time around, this does feel that this price is quite sticky and probably will go even higher. But committing to production restart and hiring and all the things that go with that does require to see, again, at least a bit of price stabilization for a quarter. That really isn't a long time, but also not too many companies anywhere in the world can say they're 9 to 12 months away from production today. So we feel that we're still very much in a unique camp that has the permits, the assets, the finances, the people, the infrastructure to be in control of our own destiny and to achieve production in a very expedited time. But at the same time, we want to see, like I said, prices stabilize here and to give our operating team sufficient time to be able to ramp up. And look, it's a very exciting time because there's no doubt there's going to be a very strong market for uranium developing here. So to be in a position we're in where we have our 2 facilities in the US in Texas and Wyoming that can be as production ready as we are is just a great position to be in. Now, I will say, obviously, we're not just focused on US production. We're obviously very keen about advancing our Canadian portfolio as well, mainly our Roughrider asset. And that will be part of our news flow and activity in the coming months, demonstrating what the potential production and timing and other value attributed to Roughrider could be. This is a project that was a feasibility stage project inside of Rio Tinto, but the market has very limited understanding around it because it wasn't something Rio Tinto talked a lot about. And so inside of UEC, we're fast tracking Roughrider as well to go side by side with our US production restart.
Okay. When we look at the last 2 years for UEC, we can see that the company, like you said, did not just wait for higher uranium prices to restart production, but you were very busy in M&A segment with the acquisition of UX, Uranium One assets, Roughrider, as you said. Then you recently acquired exploration projects in the Athabasca from Rio Tinto. Is your plan to pursue more M&A in the Athabasca or somewhere else, or do you think that cheap assets era is over?
We're not looking for any additional M&A right now because we have our eyes fully focused on production restart and also, again, advancing the Canadian assets because we did so much M&A and so much in terms of new asset acquisitions that we need to unpack these projects, integrate them, and demonstrate what's going on. There's no doubt that the opportunities that were available at $20, $30, $40 uranium price are gone. I mean, they're just gone and you're never going to get that back. And there's also a reality that the sector was dormant for 11 years. So in these 11 years, it's not like the sector was investing heavily in new project development. So a project like Roughrider, it's not like there's 10 other Roughriders out there for sale. An asset base like Uranium One that we acquired from Rosatom, it's not like there's 5 or 10 or even another one like that out there. So there's definitely a scarcity factor with M&A, and the timing to have done M&A for sure was at the time where the sector was completely out of favor. Moving forward, of course, you always keep your eyes on opportunities. You always look to see if something stands out as having potential value or whatnot. So it doesn't mean that there won't be any M&A in the future. But I would say for us right now, it really is about getting more value in the market for what we have. And projects that we acquired, I don't think the market fully appreciates these things because you think about the Uranium One assets. Uranium One was part of Russian government for 12 years. For those 12 years, they were producing uranium. They invested $400 million in these assets. Did they ever do a site visit? Did they put out quarterly results? Did they issue a press release? No. There's very limited understanding in the capital markets about what Uranium One under Russian ownership amassed in the US, on US soil in Wyoming. And the portfolio of assets they put together has never been put together before by one entity that's now all owned by UEC, because this was all part of different ownership. When you go back to the history of these assets and previous cycles, different companies own different bits and pieces of that. So I think it's really incumbent on us to demonstrate at UEC that, look, here's what we have here. These are the biggest assets in the US that are permitted and ready to go in terms of the total size of the resource base or the license capacity that we have. And we're excited to show the market what we have here, because again, I don't think there's a full sense of appreciation for it yet.
Mm-hmm. Amir, you also have a physical uranium portfolio UEC has. How many of this material do you have at the moment? You sold, we know, a part of this material you sold a few months ago. What is the plan for the remainder? And can you expand a little bit on that, please?
Yeah, I think the physical portfolio was, again, another one of those things we did opportunistically when the market was low. We went out there and we signed long-term contracts to take deliveries of uranium. And our approach was very different than what some of the other companies have done, right? So you've seen a number of other junior companies in the last 2 to 3 years raise a bit of capital and buy physical and then just sit on it, okay? Our approach was not that, right? Our approach was quite dynamic in the sense that we actually didn't take physical delivery of anything on day one. We instead said, we'll buy from you a counterparty a year from now, 2 years from now at a fixed price. And we were looking to also turn that around and monetize it and take profits out that we can then put into M&A, that we can put into things that we were buying that were assets. So if you look at our last quarterly filing, we sold close to 3 million pounds of uranium and generated $43 million in gross profits. People say, people compare us in the market to a lot of other companies that are pre-production, but none of our pre-production peers have generated even $1 of profits. We've generated $42 million of gross profits. And we've done that by, again, being opportunistic, by having a very dynamic inventory program that isn't just a buy and hold, but it's about being able to really demonstrate that these pounds can be sold, by the way, without contracts, because there's also, I think, a misunderstanding out there where people think that the only way to sell uranium is if you have a long-term contract. And I think we've demonstrated as well that that's not the case. There's a very vibrant and very active spot market where transactions get done. And here's a company without a single contract in UEC that sold 3 million pounds over the course of a year. That definitely demonstrates the thesis that this unhedged strategy works and could be executed. And we were able to fund a portion of our acquisitions. For example, when we acquired Rio Tinto's Roughrider project, we paid a portion of our 146 million acquisition cost in cash. So by having profits that we were harvesting out of our trading program, we were able to then put that into acquisitions of assets that we think we got at a great price. And we'll continue to have this dynamic program. It's similar to what, frankly, Cameco, Orano, and Kazatomprom do. If you look at the way Cameco's production and book works, they always sell almost 60% more than what their production is. So that at any given point, they've also accumulated physical uranium, taken advantage of above ground inventories, and they're able to basically have an active inventory program alongside their production initiatives. And if you step back and look at it, we signed contracts to purchase 5.8 million pounds of uranium. It was a lot of material that we signed to acquire. And so it's a substantial program that we put together at UEC. And we've demonstrated it works. We've demonstrated how we generate profits out of it. And it'll continue to be something that we can evolve and grow moving forward.
Okay. One final question for you, Amir. Can you comment on the termination of processing agreement with Peninsula? Why was that business decision made?
Well, you heard me say earlier that we have to focus on our own production. We have to focus on restarting the production at our Christensen Ranch project. And the period when we were not focused on production because we were focused on acquisitions and development and other things, and uranium prices were at 50, was a period where we could have a toll processing customer. And our toll processing customer or customers know that these agreements are always mutually able to be terminated. So Peninsula could have terminated, we could have terminated. Everyone knows that. That's how you enter into them.
Okay.
And termination is typically a 90-day period, meaning these are never meant to be long-term solutions. And so even though I think it felt like a surprise to the market, it really shouldn't have been a surprise, because anyone could have looked at it or asked the company, what is your termination provision for your toll processing agreement? And they would have said 90 days. So you immediately then know as an investor, well, that's not a long-term solution.
Mm-hmm.
So look, the reality is very simple. Again, we need to be focused on our own assets, on our own production. And I think longer term, that is where we're going to get obviously the biggest value out of. And the market is full of challenges today. For example, finding experienced labor and hands and technical teams that understand how to operate. We're fortunate to have a very strong team, but that strong team, again, is only so many people. So if that team is getting distracted with third-party processing stuff, that takes away from what our own kind of priorities are. So that's it.
Okay. Sorry, Amir, this is the final one. 1 minute answer, please. Do you see more interest from big institutional companies and funds for investing in UEC as uranium gains more attraction, especially if you compare with the period like 1 year ago or before?
I mean, I would say right now, our analysis shows that the buy side, the investment community,
yes,
is in fact still massively underweight the uranium sector. And I don't think the sector really created interest when it was at $40 or $50 a pound. Where uranium prices are now, they do generate much stronger interest from the institutional investment community. But most of the meetings we've had from London to New York, the investment community is, like I said, very much underweight the sector. So there's going to be a lot more attention, a lot more eyeballs, a lot more. There's going to be more capital coming in. And look, the combined market cap of the industry today still is a fraction of what it was, for example, in 2007 at $140 uranium, right? So there's no doubt that there's going to be continued interest and capital flows.
Okay. This was Amir Adnani, CEO and President of Uranium Energy Corp UEC. Amir, thank you very much for being my guest, and I wish you luck with USC projects and going forward with them. Thank you very much.
My pleasure. Thank you.